Good morning, everybody. Welcome to the ARMR Report. It's Monday, 24th of June. ARMR stands for Algorithmic Risk Management Research. I'm your host, Brett Rosenthal. Not just a host, I manage my own capital. I manage capital for investors through my Interactive Brokers affiliation. Everything I share with you on this show and every show I do on YouTube is information I use to manage real assets. What I'm trying to do with this show, which is specifically geared towards cannabis, we're going to get to cannabis investing, marijuana investing. I like to cover hemp investing, CBD, all that kind of thing. But what I try to do is give you a big picture understanding of the investment theme. I do the same thing for my Investing for Beginners series that I have as another playlist for you. And of course, for more advanced investors, I have a playlist designed just for you. That playlist covers our algorithms and how we manage risk across all of our portfolios. For your convenience and to help you, I'm sharing with you big picture thoughts on how to manage capital and how we manage capital. On our website, rosenthalcapital.com, you're going to see two resources on the home page. One is our risk monitor. We have 6 indexes that we follow using our proprietary algorithms that tell us when to expose capital to risk and when to reduce capital from risk. The way you can use that is to add or subtract positions to your portfolio. I'm not telling you to sell everything or buy everything. I'm not telling you, quite frankly, any specific thing for your portfolio. I don't know you. Right? You got to call me if you want to. Pick up the phone. I'm more than happy to chat and give you guidance if I can. But for the purposes of this show and this YouTube channel, if you will, I am trying to guide you with my understanding. I've been doing this 30 years. I've built pretty sophisticated algorithms to help us get long and help us protect capital. So for those of you who know this, we were aggressively long at the beginning of June. Okay, and if you look at the website, I also show you 4 portfolios we have at Interactive Brokers. They're model portfolios that clients literally attach their account to and begin using algorithms to manage their assets. From conservative to balanced to aggressive and all the way over to a portfolio specifically designed just for index investing. All I do is invest in the S&P, the NASDAQ 100, and the small cap index. We're outperforming the S&P this month by a factor of 100%. Okay, so just go watch a video, my most recent YouTube stream on Friday that explains how we're doing that. But this show is going to focus on cannabis investing, my favorite investment theme. And I'm going to specifically break down the discussions about Canopy's earnings announcement. Okay, so let's get to that first. Let's spend the rest of our time today discussing this Canopy announcement. First of all, I'd say everyone just take a deep breath. Everybody relax. If you follow the stream on Twitter about Canopy's earnings announcement, you'd think the world was coming to an end for cannabis investors. It's not. Anybody following this channel knows that we were not looking for a barn burner when it comes to earnings in this quarter for any Canadian cannabis company. Anybody that owns the stocks thinking there's going to be a huge earnings announcement that blows away street expectations at this stage in the investment cycle is dreaming. That's not why you're putting money in this space. We have a 3 to 5 to 10 year time horizon where we're going to make a fortune investing in these stocks. It's going to take a lot of effort, a lot of hard work. You can't just blindly invest and close your eyes. You have to high grade your portfolio and find the best names. But what you don't do is buy these stocks expecting them to have blowout earnings numbers now. Example, If you understand what's happening in Canada, yes, they've approved all of these things, and that's great, but it takes time. This is a retail story, guys. This isn't like an internet investment theme where you have a website in 1993 and you're attracting eyeballs with high-speed internet connections and revenue and earnings ramp, such as an investment like Yahoo, the first investment I discovered when I got in this business in 1993 professionally. That happens fast. This is a retail story. You got to open stores. You got to have the right amount of grow to support the stores, to support the SKUs. This takes time to unfold. Canada just announced the Health Department of Canada just announced the regulations for allowing companies to sell edibles in Canada. That's going to happen in the fourth quarter of this year. In fact, these companies aren't really going to ship product and deliver it to the stores and start selling it until December of this year. Now, that's a huge market opportunity. But what does that mean for right now when it comes to earnings? These companies are spending a fortune. They're spending a fortune building their business. So margins are going to suffer. So yes, Canopy had better than expected sequential revenue growth. But all I read, whether it be Twitter or I watch guys talk about it on CNBC, is the hysteria over the loss. Strangely reminiscent of the hysteria over Amazon's losses, quarter after quarter after quarter, as that company was dominating the retail space on the internet. And all I heard was chirping and shade being thrown on Amazon from analysts because their margins were terrible, because their losses were huge. Guys, they were building out to dominate a space. Canopy's building out to dominate a space. If you're frightened off because of an earnings announcement that doesn't meet expectations yet, you're missing the bigger picture. It's way too early in the game to worry about that. I saw some ridiculous tweets, so I hope you guys aren't just reading Twitter and taking what you read verbatim. First of all, half the people are just talking their book. Guys that are short say ridiculous things, so forget that. And then the other half the people, no offense or anything, they're just clueless. They don't understand how to read a balance sheet and an income statement. I saw people talking about how, as an example, Canopy had chewed through $2 billion worth of their capital. They only had $2.5 billion left in cash in the balance sheet. Guys, go back to accounting 101 in college, okay? Pull out the books. They have $2.5 billion in cash, $2 billion in marketable securities, short-term marketable securities. You have to add that together. They don't just hold cash in the balance sheet, okay? They have $4.5 billion of liquidity to put to work. Everybody just take a breath. This process is unfolding the way it should. Now, let me tell you. So that's all I really have to say about the earnings announcement. I don't think there's anything wrong with the announcement. I think it should have been expected by anybody with a brain who's thinking about the processes and how long it takes and how much money it takes to build out a retail business. And I guess what I would say is don't expect any stellar numbers next quarter. Okay? Don't expect it probably the next 2 quarters. I don't expect any big numbers from them. I expect a lot of spending, a lot of big numbers there. The CEO, Bruce Linton, made it very clear, and this is the major takeaway for me. Wall Street cares about revenue growth and margin expansion. So if I was to boil down for you everything that happened on that conference call, so you can understand why the stock suffered on earnings, on the announcement, and now it's down another, Well, it's only down about 2% right now, so it's coming off of the lows. I suspect we're close to the lows in the stock. But just so you understand what drives institutional investing capital into a stock or an investment theme. Institutions, not my money and your money, not individuals, but I'm talking about CalPERS or large Harvard endowments or any of the major capital managed by Fidelity and Vanguard and all these guys. What drives them into an investment theme and particular stocks is revenue expansion, revenue growth, like dramatic sequential revenue growth, along with margin expansion. So just forget about all the other stuff that you're trying to figure out and you heard about Canopy. What we had was sequential revenue growth, good. Plummeting margins, not good. Stock gets sold. Margins will go back up when this big spend begins to slow down and we see the benefits of the big spend. We don't know when it'll slow down or when the benefits will kick in. I can estimate that when they start selling edibles with margins of 95%, you're going to start to see margins going up. What Linton said on the call, I think that was important. I'm not sure everyone heard it. He said, we are probably at trough in our margins. So this is where margins are going to bottom out. And they're going to go back up into the high 40s. I think he's expecting that to occur by year end. We'll see if that happens. But it's very important. So there's going to be a couple quarters of big spend, a lot of planting, a lot of grow, nothing to show for it. Then a quarter or two later, you're selling all that product. Preferably a lot of it is edibles and things that are with high margins. And so then you start to get revenue growth and margin expansion. And that's when stocks go up aggressively. All right. So what we're looking for now is for this stock to build a base in here, find a bottom, start to creep higher. I don't expect any fireworks in the stock for the rest of the summer. Okay. Now let's move on to where I do expect fireworks. This is incredibly important. Okay. This is the takeaway, the conference call that I really care about. Friday at the close. This isn't even the conference call. This is Friday at the close. All right. So that closes the book on the earnings. If you have any questions for me, if you have any comments, feel free. Type it in. Email me. Give me a phone call. We could discuss it more. Bottom line, the earnings were fine. They're building their business out. They're spending the money they should spend. They still have a war chest of capital. They're building a dominant position in the industry. On Friday after the close, the Canopy acreage deal was ratified by British Columbia and the government up there. It's a done deal. It's a done deal. Shareholders of acreage will receive $2.63 a share in a cash dividend. Record date the 26th of June. Now, I've tweeted out for you. If you follow me on Twitter, it's at Brett Rosenthal, B-R-E-T, Rosenthal, or hashtag ARMR Report. A couple of tweets for you to read up on what I'm saying right now. Okay, so go to my Twitter feed and you can read up. You can see British Columbia Supreme Court green lights the project. $2.63 a share is the payment. Okay. Why is this important? Yeah, it's great for acreage shareholders. We're going to get some cash. But when I speak to management of both companies, they both use this phrase. We are going to hit the ground running and start acquiring U.S. marijuana businesses. The deal closed. Actually, they're paying the dividend faster than I thought. What I've been hearing is the middle of July. Now it's going to be June 26th. And for those of you who are beginners in the investing world, that means that if you own the shares on the record date, the next day it'll trade ex-dividend. The stock will trade down $2.63 from wherever it closed the day before. That does not mean you lost money in your account if you own acreage, because you're going to receive cash into your account of $2.63. Don't run out there and buy acreage the next day if you haven't owned it because you think it's cheap. It's just trading ex-dividend. Okay? Just for you guys who are new to the game, how this works. There's a record date. If you've owned it on that date and the next day it trades down the dividend, you will receive the dividend in your account as cash. The reason this is really important is there's no way Canopy will be the only guy in town buying up U.S. marijuana businesses. I guarantee there are other big companies, whether it be cannabis companies, pharmaceutical companies, tobacco companies, liquor companies, that are looking at this Canopy acreage deal. They're getting their lawyers on it, and they're figuring out how to participate in the U.S. marijuana market before the federal government changes laws. The minute Canopy/Acreage makes an acquisition of a U.S. MSO, perhaps, multi-state operator or retail dispensary corporation, we are going to start to see revaluations of these companies in the market. I'll save that for another episode. I'll go over it step by step. If you want to know what we're focusing on in this space, then I suggest you go to our website, rosenthalcapital.com, and subscribe to our ARMR Report action alerts. I'll give more detail to those subscribers in the next couple of days, what stocks to focus on to benefit from this acreage Canopy deal closing. All right. If you've enjoyed this, please like it. It always helps me. Subscribe, guys. Let's get the subscriber growth up. I'll have some giveaways once we get to a certain level. All right. And comment. Let me know what you're thinking, guys. All right. Take care. Be safe out there. And I'll talk to you on Wednesday for our next update.